With foreclosure starts up 440% year over year, it looks like a perfect storm is brewing in the housing market. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, putting the realism back in real estate. Today is the 26th of July. The month is almost over. Hope you're all doing well. We're going to have a lot of fun to talk about stuff today. And as always, this video is brought to you by our friends at Foreclosure.com. So if you'd like to see where those 440% year-over-year increase in foreclosure starts are, go to gethousingdata.com. That's gethousingdata.com. That's going to take you to my landing page at foreclosure.com, and you can check it out. You can see what's going on in your neighborhood, your neck of the woods. This is the type of data that you want to look at to see what's happening in the distressed property market. Foreclosure.com is the leader in distressed housing listings. So there you go. So that's why it's important. Check out the site, guys. Gethousingdata.com. All right, so big news here. U.S. foreclosure starts up more than 440% year over year. This is a report that came out via Black Knight Financial. I'm not going to get into all the nitty gritty because it's kind of self-explanatory. Basically, what did we have? Before COVID, we saw foreclosures were increasing at a more accelerated pace. COVID came, we had the pandemic, we had a shutdown, a foreclosure and eviction moratorium, pretty much put the foreclosure market on ice for about 2 years. Clearly, we're out of that now. The moratorium's been really over a year. It'll be a year than this month, the actual foreclosure and eviction moratorium. So now the lenders are starting to process, getting back up to normal pace, etc. That's why we're going to see such huge numbers with respect to foreclosure starts. I don't care about delinquencies or percentage of things that are in foreclosure, whatever. I can also tell you that Black Knight Financial typically is, all the data providers have their own way of looking at data. That's problematic out there. They're saying foreclosure starts 440% year over year. That's fine. Overall, foreclosure statistics, I think, are very underplayed and underreported. It's difficult to figure this all out. Remember, we're looking at between 3 and 10 million foreclosures coming the next 3 to 5 years. It's going to be a lot of chaos over the next little bit. We've hit our housing bubble, and now we're going to start to see a deflation, correction, crash, or whatever you may call it. But realize that it says basically starts also represented the highest shares of serious delinquencies since March 2020. So realize that serious delinquencies are people who are 90 days or greater of not paying their mortgage, which means they're on the cusp of having a foreclosure filing. So basically everything here, we've seen a little bit of a plateau, a little bit of a decrease that we picked up again in June for foreclosure starts. Now the lenders are going to be back at it. The courts will be back at it. Things will be increasing. Expect these numbers and these trends to go up as time goes on. So we are now here. Been talking about this for a long time. Thus, somebody here said a perfect storm is brewing, and a senior economist says home prices are primed for a 2008 style crash as housing construction booms and demands get crushed by rising mortgage rates. So clearly we know that the housing market's cooling. Why? The raise in mortgage rates is still going to continue to go up. People who are analysts or economists are expecting declines to play out over the years ahead. So let's take a look at this here. If you take a look at what he's saying here is supply and demand dynamics in housing market are moving in such a way that creates the perfect recipe for home price declines. We know that. We can see that construction levels are at near decades high while demand is dropping. So there's all this increase in new home and construction, but the demand's not there, which is kind of like what happened back in the last housing crisis. So, all the reasons why we're going to have a housing bubble are playing out. Housing inventory is up 18.7% year over year in June. It's risen about 50% since the start of the year. So we can see that's going upwards. You've got rising mortgage rates. You've got rising inventory on the existing home side. You've got a bunch more new house available with new home construction, new builders. As he says, that's killing demand. There is no surprise there. A perfect storm is brewing in the real estate market due to near-decade high construction levels and plummeting demand, said the senior economist at Interactive Brokers in commentary that was given on Tuesday. So basically, home builders said, geez, we're making so much money. There's so much demand. Everyone wants a house. Let's build like crazy. Now the Fed is reversing all that stimulus because they're admitting basically in their minutes and their meetings that they stimulated too much, which they did. but all that construction that was starting has to finish. So it's misalignment of time between supply and demand. So yeah, when was the supplies required? Last year, the year before? What did we have? We had supply chain issues, we had COVID, all the things that were going on that kind of really pushed this new home market out farther than it probably needed to be and made things become unattainable for lots of homeowners. Now, this is very important. I want you guys to understand this here, is that as a result, we'll see a severe pullback in home prices. He expects median home prices to drop about 25% when all is said and done. That's how much S&P Case-Shiller U.S. National Home Price Index dropped in the mid-2000s crisis. We're going to see something very similar to what we saw during the Great Financial Crisis in terms of price declines. So if you go back to what happened, and as a side note, Case-Shiller did come out today with their information. That'll be my next video, because we'll touch upon this in the next video. There's too much to talk about today. I don't want the video to be too long, clearly. So, overall, we dropped about 27 to 30% with respect to the last housing peak to trough back in the mid to late 2000s. So he's saying, expects to drop by 25%. So it could be, that's an estimate. It could be greater than that, which will be just like the last housing crisis. So there you go. You got people who are actually giving numbers. Now, I want to point out, remember, a year ago, early January this year, you know what? Housing bubble, not existent. Home prices going strong. Jump on that deal. Buy that home. It's going to keep increasing. You'd be silly not to. Oh, the increase with mortgage rates, don't worry. Home price appreciation will far outpace that. You'll come out ahead. Well, funny enough, things have changed. Now we've gone from a whole reversal as to go, 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 buy, buy, buy to, whoa, wait a second here. Pull back. Housing bubble is here. Housing crash going to happen. Looking at 25% decline in home values. Well, that's the first real article I've seen where people are actually coming out going, it's going to be just like 2008. Because again, what do we always hear? Oh, it's not, we have a housing situation, but it's different than last time. Okay, well, tell me how it's really different. Now people are coming out saying it's going to be the same, if not worse. My point is, pretty funny how things change over time, isn't it? Now, my other point is, I don't want to pat myself on the back here, but I've remained consistent since day one of my videos of what's going to happen. What derailed it was the COVID issue and eviction and foreclosure moratorium. It's basically given us a 2-year reprieve or 2-year pass for a lot of people on their housing issues. Now it's time to pay the piper and things are going to happen. So he expects to see double-digit declines in early 2023 and that the market would bottom when the Fed pivots to more accommodative policy, which he expects to happen mid to late 2023. A lot of attorneys I've spoken with that are on the plaintiff side, what I mean by that is they file the foreclosures on behalf of the banks and lenders. They're saying we're going to have 3 to 5 years of this fun and chaos going on. So that's why get into this game now in some capacity. It's starting, it's happening, here we go. Ultimately, says he's bearish on home prices because housing affordability has been dropping at an unsustainable pace. University of Bank of Switzerland highlighted this in a recent note, showing that housing affordability is at its lowest level since 2006. Going back to 2006, that's where we peaked prior to the last housing crisis. Okay, at this point, housing's unreachable when considering household incomes and individual incomes. The percentage of average monthly payments to household incomes and individual incomes as at record highs, similar to levels that we saw during the last financial crisis in 2008. So, as I said, we're basically seeing history repeat itself. This should come as no surprise. Oh, and by the way, guys, if you appreciate the information that I produce and discussion points here, if you're not a subscriber, do me the honor and hit the subscribe button. I'd really appreciate that. And if you think you're a subscriber, please reaffirm and subscribe again, because people fall off all the time for various reasons. Okay, so again, I appreciate everyone's patronage. So that's the fun part about what's happening. So 440% year-over-year increase in foreclosure starts, and a big-time economist saying, guess what? This is just like the last housing crisis, and we're going to see 25% or greater housing price declines. Pretty similar to what happened back in the day. Now, the Blackstone CEO, Jonathan Gray, says rental housing and logistics are two of the best sectors in the entire economy, and rents will continue to rise. So what the issue we're having right now is we have high price points, but rents have risen at the same time. So really, it's kind of like if I can't afford to buy, I need to rent or remain as a renter, but I'm getting squeezed at both ends here. So when this scenario happens, something has to give. Typically, it's price points that change and rental accommodation follows suit after the fact. So obviously what he's saying is we're going to see some price points change, but rental is going to remain strong. Clearly, Blackstone is like the world's largest investor, the world's largest landlord. They got a $280 billion real estate portfolio. And basically, people still have to live someplace. So they're bullish on the fact that, rent growth for apartment buildings and other logistic properties such as warehouses, et cetera, are going to continue to maintain big time growth. It's going to slow down a bit, but, a good investment is to still get into the rental market, especially on the single family side. We all know that that's the number one asset. Now, here's the thing, too. New home sales and prices plunged in June as Pulte admits order cancellations are soaring. Again, I'll have all these links in the information section of the video. You can check out directly. But basically, what we're seeing here is builders are going, oh, no. We couldn't build fast enough. We had supply chain issues. Now, as we're getting, I guess you could say towards or to the end of completion on these homes, stuff isn't happening, right? New home sales plunged 8.1% month over month in June, and the 10.7 surge in May was revised down to just 6.3% month over month. So you can see this is the one thing. The Bureau of Labor and Statistics puts out the new home sales stuff. It's always getting revised the month afterwards. So basically, plunged in June. All right, that's what we have to say. It plunged in June. Why is this important? Well, because look, inventory is finally on the rise in the new home sector. 9.3 months of supply is seen in June, up from 8.4% the prior month. Now, from an overall real estate perspective, we've always said that, or not we, but I guess you could say the sort of common agreement of equilibrium in the housing market, which means there's the right amount of sellers and the right amount of buyers, is about 6 months worth of inventory. How do we define inventory? We define inventory in that month or time sort of continuum perspective. So if no new listings or new homes came on the market starting today, it would take X number of months at the current sales pace to clean out that inventory. So today, if no new homes were put on the market or completed, it would take 9.3 months of supply. It would take 9.3 months for all the supply to go away. Simple as that. And also from the existing home sales side, we're up to about 3 months supply now, just under 3 months. So that's slowly been increasing every month. Best news of all, if you're a home buyer, the median price tumbled about 9.5% month over month to $402,000. So that's the biggest median drop in home price since September 2014. All right. So, maybe, wait 1 or 2 months. That might be a good time to jump on some of this inventory and some of these spec homes that people are building. So again, cancellations are happening at a big, they're increasing. Everything's kind of going on now, which is really surprising. So cancellation rate for Pulte homes doubled to 15% in Q2 from 7% the year ago quarter. So we're seeing people going, you know what, I can't afford it anymore. I can't do it. Why? Because of an increase in price point. And also, price point came down, but previous increase in price points and, of course, increase in mortgage rates. That's what's going on these days. Most notably, perhaps, was the admission that the uptick in cancellations has been the last 30 to 60 days, perhaps mirroring the plunge in home builder confidence, which we know is going on right now. And Walmart's had a big plunge with respect to, what's happening as the strong American consumer appears to have pulled back into its shell. So what is going on now? Are we in a recession? I think we'll find out technically by the end of this week. We see, CPI increasing ridiculously. Everything you buy has gone up in price right now. Yield curves are inverting. Every economic sign, to gross domestic product, I think you have to have 2 consecutive negative months to say we're in a recession. So all these things are lining up and contributing to the overall economy, which will affect housing. As I've always mentioned, it's not one thing that affects the housing market. It's usually multiple things happening in simultaneously or in succession that makes people pull back and go, wait a second, I can't do this, or I need to pull back and save or be conservative or not, blow our brains out on a new house that's way expensive on high interest rates. Like all these things are happening. So this is going on right now. And as I've always mentioned, this is about the economy, this is about rates, this is about inventory and stuff, and we're not even factoring in the foreclosure. Yeah, we see foreclosure starts, 440% year-over-year foreclosure starts, which is very significant as far as a number is concerned. Yes, I agree that you're going to see the big percentage increase because going from little to a big number is going to show that. But the point is, if foreclosures start happening now, isn't working its way through the system until a few months, or maybe 6, depending on the location, maybe 90, 120 days, or 6 to 12 months down the road. So we have not even seen a market that's being affected by this increase in foreclosure activity. As I mentioned last video, attorneys are saying they're being like attorneys that file foreclosures on behalf of the banks and lenders are saying we're seeing a big increase in activity. Lenders are telling us to get prepared and get ready for the onslaught. We've got probably 2 to 3 waves of this that's going to happen. They're clearing the backlog up right now. The new stuff's, and that's going to be for a good year and a half or so. The new stuff's coming through, and then some future stuff that'll be happening based on, reduction in price points and people where they are today and overbuying, over purchasing. So, why do people deny there's a housing bubble? Well, guess what? It's low inventory. It's better credit standards. And so supply and low inventory, all right, and the fact that there's speculation, there's no speculation. Well, what have we had over the past couple of years? We have had an increase in inventory now. That's that's manifesting now. We have had loosening lender standards and guidelines going on. Yeah, there's been some tightened ones, but it's actually changed. And we have FHA, which is today's subprime. Other non-banks out there doing their stuff as well, making it easier for people to jump in and board. More speculation from the investor marketplace for sure. And this is where people don't want to talk about this, but when we've heard the past couple of years of bidding wars, right? Redfin puts on their report and says, 75% of our listings have had multiple offers, and we get into bidding wars. Well, isn't a bidding war a speculative exercise? If you're going to bid against me, that's what you're doing. You're almost like you're auctioning off a retail listed property, and you get into a bidding war. Aren't you speculating that, if you're going to pay 50 grand over that list price, that you're hoping the market, catches up and therefore you're not, overpaying for a property and you've got equity in the home? So, I look at it going like retail bidding wars is speculation. So we have all the things that when you take a look at housing fundamentals that qualifies us that we're in a housing bubble. And what do bubbles do? Bubbles burst. And then we're at the cusp of that right now. So that's the scoop, guys. Don't be surprised. This is what's going on in the marketplace. So as I always say, okay, time is precious and it's time. Why do I say it's time? Because the time is now. Get into the real estate game from an investor buyer perspective, okay? Figure out what's going on in your neck of the woods, your local market. Find out and get your hands on the statistics that are available and that can show you what the properties are and how that's increasing. Figure that stuff out and get involved, because what's going to happen is another 6 months, a year from now, the masses will catch on to this and they'll start picking away at the properties and more investors are going to get involved, etc. Listen, there's so much dry powder and investment money hanging behind the scenes that if you think, I'll wait till the housing market drops to the very bottom to pick up a deal, whatever, they're not going to be around. They are going to be spoken for. People are going to be jumping on this, all right? We know that the housing is now, the single-family house is the number one asset class in America, if not the world. So people will be vulturing. You want to get into the game, understand the game, and listen, there's a lot of headwinds, a lot of players that we have to watch out for, but here's kind of my philosophy is that I don't fight against the players. I don't paddle upstream. I figure out how to work with them and find where the seams are, the openings, so we can get our pieces. All right, simple as that. So there you go, guys. Anyway, thank you once again for the views, like, comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. I look forward to speaking with you in a couple of days. So take care, and we'll talk to you soon.